Hi everybody.
Hi.
It's Karen and I'm here today with my friend Jackie Frank. Jackie Frank is a mortgage banker and today we want to talk about financing, refinancing, and talk about some of the myths that we're hearing about these days when it comes to refinancing. Okay, so let's talk about refinancing. What does refinancing mean?
Okay. So, if you have a current mortgage and you are going to change that mortgage, whether it be another 30-year fixed, which is the most common, to a lower rate, whether it's with the same lender or another lender, that's refinancing. If you're going to refinance because maybe you have an adjustable rate. There was a period of time everybody took adjustables. Now is a great time to switch from that adjustable and look into switching to a fixed that might be a lower rate than even your adjustable is.
Right.
Refinancing is also when you use the equity in your house. Take the cash out. Maybe you want to debt consolidate. Maybe you want to actually finance college. Or just take the cash out to do other things.
When does it make sense? People say, I locked in 3-4 years ago. I'm at 3.5, and now I see rates are floating around. Right. Say they're 3 for maybe the same product, maybe a different product.
Right. So it's a calculation. And so the main thing you want to do is you want to get on the phone with someone who's in the mortgage business, someone you trust. I would get a personal referral from someone. Certainly feel free to call me, but whoever it is you do business with, it should take them 10 minutes to figure out whether it's worth it for you. Now, a couple of factors you look at, which is, first of all, you have to factor in the closing costs. Depending on the state that you're in and the type of property you have, it can cost you anywhere from $3,000 to close or $12,000 to close. Depends, again, on the state, on the loan amount, on the fees. Even if they get rolled into the loan, you have to factor them in. The second thing that's really important to look at is how long do you think you're going to stay in the property? Right? I spoke with someone the other day. They thought that they would be, their kids are 14, 15 years old, and then once they go to school, they're probably going to sell. Well, unless you're saving $500, $600, $700 a month, it does not make sense to go through the process, spend the fees if you're going to sell the house or pay off the loan in 2 years. So the goal is that the cost of the refinancing is made up in 2 years or less. Meaning, let's use the example where closing costs are $5,000, that you save at least $300 a month, which if you calculate that out, that's $3,600 a year. And so now before year 2, you have broken even on the $5,000. That's an example, right? There is effort and time and cost for you as the consumer to do this process. It hasn't. Though we're very technically high end. You could do advanced. You could do it all online. At the end of the day, it's still a process for you. You have to dig out everything that we need, and as we mentioned before, if it's a co-op, you have to dig it out twice.
So speaking of co-ops, so a lot of buyers say, oh my God, I'm never going through this process again of buying and financing while buying, because they know that it takes 3 to 4 months from contract to close.
That's right.
Most of it, we're waiting for a bank to get us documents, and then we have the board approval.
Right.
And buyers and owners, shareholders need to know they have to go through, in essence, that same process.
That same process.
It's not like they're going in front of a board again, but you do have to get approved because your financial situation is changing.
Right.
Your debt to income ratio might be changing. Your liquid assets might be changing. The liquidity in your home, especially if the market shifts, like what happens if the apartment's not worth what you paid?
That's right. Well, there are a couple of things. So just to talk about the role of, the financing and the managing agent and a co-op refinance. So the domino effect is still the issue, which is starting with getting your loan, you get approved, then you have to put together a board package. And there's no real estate broker to do it for you. Sorry. So guess who helps you do your board package? Good professional mortgage people should help you do it, but a lot of times you as the consumer are the ones making copies. I mean, you don't find too many buildings now where you're making actual paper copies, but every once in a while there is a board that still wants 8 copies and an original, and that's a lot of paper flying around, a lot of copies you have to make. But let's just say it's even online. So you get your mortgage approval, you need the appraisal in this case, because as you said, if your building says they allow maximum financing 75%, that's based on the value now, not the down payment. This is what does the bank say it's worth, what are you borrowing? And then, as you said, the board has to then look at it and say, okay, not only is the loan to value still there, but we still believe that you qualify to borrow this. Maybe in most cases, you're getting a lower payment.
Right.
So it should be okay.
Yeah.
But what if you're going to get extra cash?
Right.
What if one or both, or if your household income changes? It's still that the bank will allow you to spend up to typically 45% of your income, and the board is typically 28.
Right.
There are $7 trillion worth of mortgages that are refinanceable right now, meaning they are at a rate 4 or higher. They are an adjustable that could possibly be switched to a fixed. They are a 30-year that could be brought down. So refinanceable dollars, $7 trillion. There is $2 trillion available dollars to do it in the entire industry. I'm not talking about my company, right? So what does that mean? That means that it's like musical chairs. There won't be enough for everybody to do this. So what does that mean? Just pick up the phone and find out now. Don't sit on the sidelines saying, "Oh, I think," because this is what everybody thinks.
Right.
We haven't hit the bottom yet.
Right.
But you have to understand it, because of the supply and demand. You're not going to get a 1% rate, even if feds lower the rates to negative.
Right.
Banks are not going to lend you money at -1.
Right.
Right? There's profit, and there's just let's use hand sanitizer.
Yeah.
You can go onto Amazon right now and pay $100 for a bottle this size.
Right.
Not right.
Right.
And I'm not saying banks are gouging, but the bottom line is there isn't enough money
Yep.
to refinance everyone.
Yeah.
So therefore, don't wait. Just get on the phone, start the process. If you don't think we're at the bottom, just don't lock.
Right.
Apply, get approved. 30 days, 40 days, 60 days. This process for a co-op could take 90 days. So you apply now. Your loan officer should guide you on a good day to lock and how long the process is going to take. But when the rates go down lower, if you're not in application, no one's going to lock you in.
No one's gonna like it. Right. So, yeah, call now.
Yeah, call now and listen. A phone call. It's a. You do not have to go forward, but you just want to know that it's something you should think about or not.
Yeah.
I've actually made a lot of people feel better after they call me and I do the numbers and I'm like, you don't need to do this, and they're
Right.
like, you're right, and then they can move on and do something else.
Exactly.
Yeah.
I've been calling all my clients lately and saying, "Hey, do you even know what your rate is?"
Exactly.
I read a stat that said only 27% of people know their interest rate.
Really?
Yep.
Wow. I didn't even know that.
27%.
Right. I mean, it's a
Because
great
you walk
time.
it in and
right.
you're like 30 years later.
Right.
I mean, I know my parents, it was like 18, 11,
Yeah.
somewhere around there. Now
know.
people are like, well, it's definitely under 5.
That's true.
you know?
Right. Right.
But
Yeah.
what number? I don't know.
You don't know exactly, but it
Yeah.
is also a good time, again, whether if you have an adjustable or something,
Yeah.
just take a look at it. It's
Yeah.
literally just doing, same thing you would do with your insurance. Just get it examined, make sure it's the right product for you now, and if
Yep.
it is, great, and if it's not, connect with somebody that knows what they're doing and get it done.
Like her.
Like me.
All right.